Hi everyone. I've been studying some of the great current fund managers and I came across Punch Card Capital run by Norbert Lou. The only problem was there is pretty much no information about Norbert Lou and his fund. He has to report each quarter to the SEC about the positions of the fund, but besides that, there is just very little information. I can't even find a picture of him, and there is nothing on the website, which honestly is pretty cool. I think the day I start a fund, I want to be so simple like this. No need to sell yourself and raise money when you post big annualized returns. Let the results do the talking. But fortunately, there was one interview recorded and accessible online way back in 2011 that gives us a lot of fantastic insights into this mysterious Norbert Lou. So today I thought I'd share this with you, and it's all about Norbert Lou and his fantastic investing strategy. Okay, here's some of the information I found about Norbert Lou and Punch Card Capital. The fund age is 17 years old. It was started back in 2004. He's 47. The fund size at the moment is around $300 million in assets under management. The performance, well, there's a few different reports here. There's 14% per annum as of 2011. Apparently since 2018, it's been like 27%. So look, not quite sure on the historical performance here, but it's been doing pretty well by all reports. Then regarding his philosophy, well, he's a long-only, no shorting, concentrated portfolio manager. Norbert's skill is he is a deep reader and a patient investor. Currently, there's only 3 stocks in his portfolio. Therefore, he has really high conviction on his ideas. So only the very best ideas make it into the portfolio. I don't think he has ever had more than 6 positions at one time. He doesn't use any leverage, and he hunts for undervalued and underfollowed companies that can compound at extraordinary rates. He prefers small caps as well. He holds plenty of cash, around 25%, and he's still able to get these market-beating returns. So this is his style, but you might be wondering why it is called Punch Card Capital. Well, that originates from a famous Warren Buffett quote, and here is that famous quote. I'm terrible at impersonation, so just pretend this is Warren Buffett's voice. So, I always tell students in business school they'd be better off when they got out of business school to have a punch card with 20 punches on it. And every time they made an investment decision, they used up one of their punches because they aren't going to get 20 great ideas in their lifetime. They're going to get 5 or 3 or 7, and you can get rich off these 5, 3 or 7. But what you can't get rich doing is trying to get one every day. So he's referring to a highly concentrated strategy, and it resonated with Norbert Lou so much that he named his fund Punch Card Capital to reflect this philosophy. Norbert Lou was a smart kid, good at school, and he went to Cornell University. But his investing career started when he read the book One Up on Wall Street by Peter Lynch. By the way, this is one of my favorite books, and there is a link in the description of all my videos. So the idea that buying stocks is a part ownership in a company really resonated with him. Plus, the book opened his eyes to the possibility of finding big investment returns with this value investor mindset. I try my best to teach that here on my channel, but the book does it far better than me. Then he somehow convinced his mum to give him $60,000 to invest with him, and he would follow this value investing strategy. Norbert used the money to invest and learned what worked and what didn't. Now, I think this is a really good lesson for those of you who are new. You can study all you like, but it's not the same as actually putting real money into an investment. I remember making my first investments when I was about 21 years old. There is something more special about having real money that you and your family worked really hard for and having this in an investment, like your own idea. Putting your money in the market is just how you learn. So I encourage you to do that if you haven't done that yet. Now, Norbert Lou then went and worked as an analyst at a bank for a while, but the next turning point was when he submitted a couple of write-ups to Value Investors Club. Now, Value Investors Club was started by Joel Greenblatt, the famous investor and author of the book, The Little Book That Beats the Market. Value Investors Club is a place where members can submit their research and their best ideas receive $5,000. I think it's $5,000 a week is given to the best pitch. It is to encourage great ideas and thoughtful analysis of investments. Plus, Joel Greenblatt gets to see up-and-coming investors, and he also gets lots of interesting ideas. Now, I get a lot of value out of this website when I'm researching companies. I personally haven't submitted a write-up to Value Investors Club before, but I actually might try it one day. I hadn't thought about it until now and while I'm making this video. Anyway, Norbert Lou submitted a handful of write-ups and won the prize multiple times. And one of the stocks that he pitched was NVR, which at the time was the best stock he could find. Now, NVR is a home building company it's got a bit of a difference. I won't go into the details as to why this business was different to all the other home building companies, but Norbert Lou had found something that was going to be a huge winner. His investment in NVR went from $23 to over $700 over about a decade. Now, this write-up was seen by Joel Greenblatt, who eventually convinced Norbert to start a fund in 2004. Joel Greenblatt saw the talent in Norbert and helped start Punchcard Capital with seed money of $10 million. See, Joel Greenblatt, a very successful investor himself, had a lot of amazing things to say about Norbert as well. Now, I won't read them all here, but here are my favorites. To this day, I hand out the first 3 write-ups he wrote on Value Investors Club every year to my students at Columbia to show them what a brilliant, concise, straightforward, and clear investment thesis looks like. You can't ask for more than what Norbert wrote. Norbert always does the right thing at every step of the way and goes out of his way to be honest, fair, and straightforward. But even the best investors make some bad investments sometimes. One such mistake was an investment in Abercrombie & Fitch, the clothing brand. Most people think of teen retailing as a fickle industry prone to fads, Norbert said. But several generations of teens had seen Abercrombie's products and they all were willing to part with a large portion of their money to buy them. That was the thesis. But this investment was a failure, as you can see here on the chart. It turned out not to be as bulletproof as I thought, he said. I'm pretty sure in 10 years the company will still be around. It will have a lot of stores in Europe and Asia, and its cash flows will certainly be higher. But I bought it expecting a certain rate of return over the next decade, and it was set back because of the recession and how much progress the copycats had made. But the money went to good use. See, Norbert made an investment around the same time in Burlington Northern Santa Fe, a railway company that had been beaten up in 2008. With strong pricing power and a monopoly-like position in its geographic area, Norbert expected Burlington Northern to compound at very high rates for years to come. However, in the fourth quarter of 2009, he found out that his newest punch was being stolen by another punch card investor. The company announced that it was going to be acquired by Berkshire Hathaway. So Norbert elected to take Berkshire Hathaway shares in the merger, giving him the chance to continue to own Burlington Northern indirectly while also getting the services of the world's best capital allocator at what was considered to be a bargain price. And even to this day, this position is still part of the portfolio and has been growing along nicely. But he admits Berkshire Hathaway won't get the big returns he is searching for, but he considers Berkshire Hathaway like a AAA rated bond that has double-digit returns. Norbert Lou has only improved and refined his philosophy over the years while still keeping this punch card philosophy. Currently, there are only 3 positions in the portfolio. We have Berkshire Hathaway, which is only there because Burlington Northern was acquired by Buffett. Number 2 is Winnebago, and the third is Ally Financial. So when I'm looking over the 13F documents from the super investors that I follow, unfortunately we just don't get a trade very often from Norbert. But when I do see one, I'm going to take a lot of notice. He is one of the best researchers and long-term thinkers with decades now of experience. It would be idiotic of me not to take any investment from Norbert seriously. He looks for undervalued, underfollowed, small cap companies, which are exactly in line with the types of investments that I'm looking for as well. If you're interested in the interview that I read, I'll leave a link in the description with Norbert Lou, as it's just a fantastic read. Now, don't forget to subscribe so you don't miss my future videos. And if you have an investor that you love, that you would like to tell me about, I would love to hear it. Learning about great investors is something that we can all do to improve ourselves. I'll keep learning and studying and sharing what I find, and I'll have more videos like this coming soon. Remember, if you are new to investing, you need to put some money into your favorite investments so you can really learn. Enjoy the journey, and I'll see you next time.